A very good evening, ladies and gentlemen, and a very warm welcome to our chief guest, Shri Tuhin Kanta Pandey, Chairman, Securities and Exchange Board of India, our esteemed members of the jury, our panelists, our winners, and our partners, and to all of you who are gathered here to celebrate this evening. Financial Express CFO Awards celebrates excellence, best practices, and outstanding achievements by India's finest chief financial officers. Now, these are strategic thinkers, trusted advisors, and above all, masters at asset management. The evening will feature 3 segments. We'll have a panel discussion with some of the brightest minds in the industry, followed by a keynote address by our esteemed chief guest, Shri Tuhin Kanta Pandey, concluding with the much-awaited awards presentation. Now, before we proceed any further, we'd like to say thank you to our partners, our associate partners, Government of Uttar Pradesh, Runwal Realty, L.M. Thapar School of Management, Nyati Group, Hindustan Construction Company, and Maharashtra Industrial Development Corporation, our celebration partner, Radico Khaitan, and our knowledge partner, Deloitte India. Thank you very much. I'd like to request Mr. Shamal Majumdar, Editor, Financial Express, to please come on stage for the opening note.
Good evening, ladies and gentlemen. Once again, a very warm welcome to the FE CFO Awards function, which is held every year to honor the best and the brightest chief financial officers of corporate India. This is our way of celebrating corporate excellence. We are indeed grateful to our chief guest, SEBI Chairman Tuhin Kanta Pandey, who has agreed to join us on this important occasion despite his busy schedule. Shri Pandey, who took over as SEBI Chairman on March 1 this year, has already hit the ground running. You have seen day before yesterday's flurry of changes that the SEBI board brought in. He has steered us through a complex financial landscape at a time when the global order is being reset. Mr. Pandey is an IAS officer of Odisha cadre belonging to the 1987 batch. Before joining SEBI, he served as Union Finance Secretary, Revenue Secretary, and Secretary DIPAM. He is no stranger to managing financial complexities. His last role in the Finance Ministry saw him play a pivotal part in the 2025 Union Budget. He was also instrumental in drafting a new income tax bill to replace the outdated Income Tax Act of 1961. We look forward to his address and hearing from him about his vision to improve capital market governance. Before that, of course, we'll have a riveting roundtable discussion on the topic, Gen Next in family business. Are they prioritizing investment management rather than focusing on entrepreneurial ventures? The panel members are Rashesh Shah, Manish Kejriwal, Nilesh Shah, and Dinesh Khara. Our gratitude to all of them for being with us here today. Congratulations to all the award winners in various categories. Quite a few of them have come from very modest backgrounds, but have grabbed the opportunities that life threw at them and came up the hard way through sheer perseverance, hard work, brilliance, and of course a very strong ethical backing. The award winners can indeed be very proud that they have been chosen by a distinguished 6-member jury led by K.K. Mistry, former Vice Chairman of HDFC Limited. Some of the jury members are present here today. Apart from numbers, of course, the candidates were also assessed on corporate governance. Watching the jury in action was a hugely educative experience for all of us at FE. The sheer rigor that they put in was absolutely fantastic. The award winners today are an example of fighting the odds and leading in a world where uncertainty seems to be the only constant. And that's changing how companies manage risks and develop growth strategies. CFOs, therefore, are becoming a more influential part of the strategic planning process in their companies. For a long time, CFOs were the guardians of corporate strategy. They now are a powerful force in defining the strategy as well. The challenges before CFOs, of course, are many in terms of the quality of accounting policies and how to deal with regulatory interventions on better disclosures. While a large number of companies have improved remarkably on these fronts, there is still a substantial number which is still yet to come up the curve, and for whom all the talk of ESG, corporate governance standards, etc., are still just a work in progress. So there is no doubt about the need to have a vigorous debate on the role of audit committees, nomination committees, and a proper whistleblower policy. So ladies and gentlemen, the stage is set for the FE CFO Awards show. Just sit back and enjoy. Thank you very much.
Thank you very much, Mr. Majumdar. And now, ladies and gentlemen, we have a very interesting panel discussion tonight on Gen Next in family business. It's my pleasure to invite our panelists to take the stage. We have Dinesh Kumar Khara, the former chairman, State Bank of India; Manish Kejriwal, managing partner and founder, Kedara Capital; Nilesh Shah, managing director, Kotak Mahindra Asset Management; Rashesh Shah, chairman of Edelweiss Group. Request you all to please join us on the stage. And this particular session will be moderated by Ms. Shobana Subramanian, the Deputy Managing Editor, Financial Express. Shobana, it's over to you.
Good evening, everyone. I can see there's a lot of buzz, and I think we're going to have a lot of fun with this discussion. I'm raring to go. So the context for this is that Mr. Uday Kotak believes that heirs in business families are choosing to invest or manage money rather than run real businesses. Mr. Kotak believes that the next generation must work hard and not become financial investors too early in the day. Of course, there are two sides to every story, and that's why we have this panel here today. So I'm going to throw this open to them, and I'll start with you, Manish. So, what do you make of this? Is it true that a lot of youngsters don't really want to get their hands dirty on the shop floor?
Firstly, thanks for having me here, Shobna, and thanks for FE. This is a great topic. I hope we can have some fun with it, despite having such senior regulators in the room. Welcome, sir. Thanks for being here. My thing in this is, I think ever since Uday came out with his statement, and then Harsh Goenka, this is, wrote the piece, I forget, was it your newspaper or one of the others? It led to a whole bunch of commotion. The way I see this actually is a little bit more, I think Uday said it in classic Uday form, just to do what we call chabi. But I do think it is horses for courses. I don't think it's simplistic enough to say everyone's become lazy and done this. And I really believe, even though I'm an investor, you can't take the McKinsey out of me. So the framework which I was flying back from New York yesterday, as you know, and the way I thought it'll be helpful to think through this is from three different lenses. One is that of a shareholder of a company, which I think is actually primary. I can't say anything else given who we have in the front row. But from a shareholder perspective, you have to get the absolute right person. It should make no bloody difference if it's a family member or a professional. I actually think as a country we're going in the right direction. I think the second lens is that of the family. And there actually, if there is an alignment between your skill set and your passion, but the problem in families, as everyone knows, there are many factions of a family. You try to optimize things which a shareholder may not want to optimize. And finally, which I think, because I still think I'm Gen Next, is that of the young men and women who I think actually are some of the most phenomenal individuals that I've come across. If you look at their startups, if you look at how they run some family companies, I think for them, it's their passion, what they want to do, which is often ignored in the basis of all this. So I actually think and many in the audience, including some of Uday's old employees, have said, make sure we punch holes at the theory, and we absolutely should do that today. Having said that, and I'll say this in the presence of this regulator, not another one, the perfect alignment actually in family business and a person is actually Uday himself. And I don't want to be too controversial starting off, but I, as an investor lens, would want to put more money and time in Kotak Bank if Uday is more closely associated with it, rather than what we hear from some of the other regulators.
Yeah, you set the cat among the pigeons. Rashesh bhai, you've been an entrepreneur, and even you had told me this a few years back, that youngsters are simply not willing to take risks. They don't want to take a financial risk. How are you seeing this?
Yeah, I think over the years, fortunately, stock markets have been doing well. There is a fair amount of family wealth that has got created. And the advice that we always give to the new upcoming, is don't worry about taking risk. In fact, it should be the other way. You have family wealth, you have the safety net, so take risk. But along with that, whether you are taking risk by doing a startup, or you're taking a risk by investing, or by starting an enterprise, the idea is to think long term. Because I think if I'm 30 years old today, unfortunately I'm not, but if I were to be 30 years old today, then India for the next 25 years is an amazing story. So instead of trying to optimize for the next 3 quarters or for the next couple of years, they can afford to take a really long-term view and really compound over the long term. So whether, there are a lot of them who are good capital allocators, they are good investors in other businesses, or they themselves can run their business. So we always say that, but please take risk. Please step out. You can afford to take risk because you have the capital and the wealth. And along with that, we also say that build institutions. I think what India needs is not just investing. What we need is for people to build businesses and organizations and institutions. And we all, if you have the wealth, invest for the India for the next 25 years in building the legacy for all of us.
That's a great point. Mr. Khara, this also Rasesh Bhai had told me incidentally, is that a lot of youngsters are unwilling to take loans. That is one reason. I mean, take loans, in other words, to put it more broadly, negotiate with banks. And the reason for that is that they are scared that if something goes wrong, the consequences today are very not savory, should I say. And therefore, they don't just want to get into this hassle of debt and, dealing with banks and giving personal guarantees. What would you say? Because that seems to be a reason that's keeping at least some youngsters away.
Well, I think this is a very interesting topic, and I would say it's very topical in the sense that the current environment where we are, there is a paradigm shift as compared to what it used to be around the time when perhaps Uday would have got into the enterprise. I think the way ecosystem has got developed, the financial markets have got evolved. There is a structure which is available around for investment, and it is not merely that investment into something which is of interest to the younger entrepreneurs. That is one. Secondly, we have got the startups available. They can actually bring in the value in their own enterprise by financing some of the startups. We have actually seen that when it comes to the family offices, some of the family offices are actually investing into the new generation ideas, which can evolve their own enterprise also. So that is something which has been seen. What you mentioned in terms of, hassles in terms of raising loan, etc., I think, or for that matter, giving guarantees, particularly for the younger generation, which has got the availability of capital with them. Large corporates, we all know that it is not, the guarantees are not really sought. It is essentially the project, the viability of which is looked into, and also the commitment of the promoters are looked into. It is not merely because had it been only driven by the guarantees, then perhaps the kind of growth which we have seen, we would not have seen. So that is, having said that, I must also mention, today, if you look at the size of the AIF industry today, it is at about 14 trillion. There are some estimates which says that by 2028, this will be somewhere around 43 trillion. When you look at the banking system deposit base is 240 trillion and the loan base would be around 180 trillion. So if you really look at it, AIF, which has come into existence only for last 10 years or so, that has come to a stage. So which actually means that there is lot of ability, AIFs have got the ability to channelize such money and then deploy it in a very meaningful way, ensuring the returns. And also, today, the kind of professional managers who are available, they are there to run the show. So essentially, those who have got the capital, they have to ensure that it is deployed in the right manner. And I think, irrespective of whether they are putting it in their own venture or they are putting into multiple ventures through these structures, that is something which I believe is a pathway for the India to grow. Thank you.
Nilesh bhai, you studied lots of companies, lots of managements. Do you believe that in many cases, the parents themselves are not so keen that the younger generation take over because they feel that not having earned that capital or wealth, the youngsters may not use it as carefully as they might have. As in, there is a conservative mindset, whereas youngsters are more, not so careful about money. I mean, the lifestyles are different, their mindsets are different. What do you think, having studied so many companies and, managements?
So, thank you, Sobna, for having me here, and congratulations to all the winners. In India's case, whatever one says opposite is also true. There are families which are conservative, and yet they don't mind passing the baton to their girl child, which was unheard of 15, 20 years back. There are families which are into traditional businesses, but they don't mind supporting their next generation, going into philanthropy, going into a restaurant business. I recently met a diamond processor in Surat whose kids are in restaurant business. Now, even that kind of permission is given. So to me, it's all about where is the passion of the next gen, and is the family willing to support that passion? If you will bring someone who wants to run a restaurant into diamond processing business, by and large, that dish is not going to be good. There is a Sanskrit Subhasit which probably applies to next gen. Yuvano nav yugasya deepah santu. Yuvano nav yugasya deepah santu. Youth is the torchbearer of the new era. Jnana Vijnana Sampanna. May they be blessed with knowledge and wisdom. Dharme sthiti vishvam satatam. Dharme sthiti visvam sanadati. Bhavishya karyati satatam. Let them follow the path of righteousness, dharma, and let them build a better future. Knowledge, wisdom, governance, and aim for building better future. The old gen should promote next gen in that direction.
No, that's fine, but Manish, to come back to you, what Mr. Kotak's point is that, if from the bigger corporate business houses, the children don't, sort of continue, we are sort of, in a way, he feels losing our animal spirits. You know, he was worried, he said that actually, that, you know, the large investments, etc., you know, it's okay to invest in a startup here and there or put your money in some family office, but what he was really worried about is that India is losing its entrepreneurial spirit. If not losing, at least it's diminishing.
So Shobna, I am not complaining. Either next gen will invest with me or I will invest in them. I am blessed on both the sides. And there is no easy answer. I recently met in Calcutta old gen, father and uncle. They said, Nilesh bhai, आप बच्चों को कुछ समझाइए. आपकी तरह कंप्यूटर के सामने बैठ के कुछ करते रहते हैं. फैक्ट्री में आते नहीं हैं. I went to meet the kids. Normally 1 or 2 kids will meet me. This time all 5 kids came together. They said, Nilesh bhai, पापा को समझाइए. रोज 150 किलोमीटर जाते हैं फैक्ट्री चलाने के लिए. 12% रिटर्न बनाते हैं. हमें देखिए हमने इन्वेस्टमेंट करके 30% रिटर्न बना रहे हैं. The best option for me was to take Patli Gali and run away.
No, but to come back to you, Manish, you know, Sajan Jindal said this. He said that young Parth, a few years ago, went to Bangalore and he went to a factory that made EVs. And he was very excited and he said he just wanted to invest in that because he said EVs are the future. And Sajan Jindal is on record as saying, so I went with him, I took a look, then I came back and said, no Parth, you have to build something yourself. You can't just invest in that. So, you know, just to get a sense that, you know, how should we be looking at this?
I love Sajan. I think Parth is also, I think he's had a phenomenal start. I think Shobna, I'm going to get serious now and say from the perspective that my third lens is that of the child. Now, what you've all set up is these all, if you're talking only about these families which are well endowed, and no matter in a sense how much risk they take, they will still end up having their daily bread and butter. Then I would then go to what does the child want to do, right? The worst thing for that child that Nilesh was talking about was to go 200 kilometers. I really think, and there's no way any kid in the 20s to 30s knows what he wants to do. Like, I think there's no correlation between what you study and what you end up doing. Like Sachin, there are many others who come to me for advice on what should the kids do, not about investment advice. That we'll do another time. And my suggestion has always been the single most important skill set you want to inculcate in your children at this stage is actually not wealth creation, but confidence. And confidence, in my mind, comes out of doing well on what you do and what you want to do. So what I always suggest to people at that background, because they've normally studied abroad, they've gone on to do business school abroad, is actually start your career, the 2-3 rules. One, actually, unless it's critically needed, stay far away from your home business. It doesn't matter if you're a fund manager or you work at General Motors at Detroit. Your first 4 or 5 years should be people appreciating you by your first name and your work and not by your last name. And the problem is when the kids come back to India, even if they're with McKinsey or Bain, you're known by your last name, unfortunately. Poor Parth won't get a fair chance in India if he's working at McKinsey or Bain, because the clients will know who he is, right? So on a serious note, keep them out. When they come to India, make them start, and this might sound conservative, but from the bottom. The issue with some of the family-owned businesses, the kids come back and you're made to take on the role of a CEO. The poor kid has no clue what being a CEO means. In your first 20 years, you spend behaving like a CEO without the skill set. And so what do you lose that time is your confidence. And God forbid, if the business has gone through a wrong turning or you've taken a personal loan, which I know doesn't happen in these sort of families, you've lost your confidence for life. So my simple things have been, it doesn't matter if they want to be a painter, philosopher, or an industrialist. First few years, stay far away. When you come back, you start at the bottom. I mean, my two brothers-in-laws they were forced to start at the shop floor. I think they've come out okay. I also believe that there's again being mischievous, but I would say it's not, it's also, he also made it sound what Nilesh and I do and Rashesh Bhai and I do for a living is easy. It doesn't mean whatever anyone who does asset management will automatically be successful. If that's the case, we should be dinosaurs, Nilesh and Rashesh Bhai. So it's also, if you take it as a profession, doing this is not easy either, right? So all I'm saying is, one, let the passion of the child decide, along with the needs of the family. But then, whatever you do to be the best in the industry. Whether it's a family office, whether it's an industrialist, or, as a family lens, you might end up being a kid who, in our traditional world, may not be the A-type personality. It's perfectly fine to run the CSR project or the philanthropy aspect or the 100 other roles you have as a family. So I do think it is horses for courses, but in the middle of all this, the voice of that poor next gen gets lost. So I want that to be heard.
According to Mr. Goenka, the next gen is not interested in being heard. I mean, they're far away from it all. Okay, so it's fine. I think there are, like I said, two sides to every story. So, just to understand the investment, and this whole animal spirit. So, Mr. Khara, since you've been a banker for long years, so you don't see any, risk from this, the fact that many youngsters don't want to take on their family business as any risk to the entrepreneurial spirit, right?
No, I would actually say that now this new generation of startups, they are the real entrepreneurs. The one who have created the wealth over all these years, they are now the financiers, they are the investors. So we were not having that upper layer earlier, which was essentially investors layer. Today we have got the investors layer and we have got the entrepreneurs layers in the startups. So let us acknowledge that and let us build it up with this.
Yeah, I think, Rashesh Bhai, one point is that a lot of the startups are in the services sector. There is, yes, EVs are a manufacturing sector. So do you see then, I mean, we talk of India's manufacturing story, how we want, manufacturing to be a bigger part of our economy. So, do you see that now services continues to be whatever, 56, 58% of the economy and manufacturing sort of lags or no?
Yeah, I think, though I think all of us agree that investing is also good for the country and, people who are in family business where they build wealth should have a choice of investing. But I think, I do still think that we are losing that ability to invest in hard assets, ability to invest even in innovation, doing something new. And I always say that I think ultimately the holy grail in anything is how do you build value? How do you create value? Whether you create by, giving capital to somebody else or building an enterprise on your own. But what we have seen is if you spend the early part of your career in building something, managing people, managing stakeholders, it's easy to be running a business and then become an investor. While if you start your career and you are, let us say, 25 years old and you start investing via the family office, you might end up being a good investor, but you may not acquire the good business skills also. So we always at least recommend, the older generation and the newer generation. Maybe the older generation has a proclivity to keep on running businesses. The newer generation wants to invest. We do think that running a business is a good start for anybody's career. And if you're born in a family with wealth, you are born in a family with resources, you are born in a family where the platform is there, use that, experiment, run the business like, Manish gave the example of Bajaj Auto, Rajiv and Sanjeev, both of them started on the shop floor. I think that's a good formula. So while we encourage people to invest and all that, we should encourage the generation coming up to build businesses, work on the shop floor, do the hard stuff. You can always invest afterwards. I think investing is always going to be available. A good CEO in the early part of the career will end up becoming a very good investor eventually.
Nilesh bhai, are we running short of Rajiv Bajajas in this country?
I don't think so. I'll give you an example. This is not available even on Google search. This is what IIT Chennai, IIT Madras professor told me. There were 7 kids in Chandigarh Engineering College who decided to make a rocket engine. They built a rocket engine with 60 lakh rupee investment while pursuing engineering. And it created thrust of 4,500 newtons. The commercial rocket engine thrust is 25,000 newtons. When these kids get engineering degree and maybe instead of 60 lakhs get 6 crore, they'll end up building a rocket engine of 25,000 Newton. We don't even publish this news. All of us received a news item that a Chinese company, BYD, created a battery which will be charged in 5 minutes. How many of us know that in India there is a startup Exponent which created a battery charging for truck in 15 minutes? I don't think so. We are short of talent. We are short of recognizing our talent and educating it and promoting it. That certainly is short in this country. But talent, no doubt about it, it's available plenty.
I'm going to be slightly provocative. The question, Nilesh, that is always coming is, why is this not happening in the established family businesses? Why this is happening, at IITs where there are young, hungrier entrepreneurs coming out? And if you see the last 8-10 years, all the startups and all, they have happened in India. But unfortunately, the established businesses, the coming generation in that, why are they not innovating and investing more and more aggressively?
So Rashesh bhai, there is always exception. Anand Jain created a fantastic business. Harsh Jain has created even more fantastic business. Now we can keep on complaining, oh, but that services business, not manufacturing business. But by जो भी है business तो खड़ा किया है ना, services हो या manufacturing हो.
Point taken. Yeah, so we'll just do one round because we are on investments. I just thought I'll take thoughts from all of you on the state of private investment in India. State of private capex and investment of India, because we've been waiting. I remember even pre-COVID, we had a roundtable on this. And even at that time, there was no investment, and it's been 6-7 years, 5 years at least since. So, Mr. Khara, as the banker, why isn't it moving? I mean, when is it going to move?
See, the fact remains that the capacity utilization at 75%. Actually, all said and done.
But Kharaji, there are so many other businesses. Why do we only have to look at the...
I'm just responding to your question. So when it comes to private investment, what you mentioned, there are certain sectors where we have seen definitely there is a private investment happening. But when we look at the aggregate number, then perhaps it is not seen as much. Then, aggregate number has to be seen in the context of the macro and also the global headwinds also. With the kind of global headwinds which are there, taking such decisions which are having a long-term impact, that becomes a bit of an issue. But I would still say that there are still some sectors where definitely there is a private investment happening. There is no dearth of that, and people are not shying away from that. So that's a reality, but yes, of course, at an aggregate level, we still are awaiting for the private investment to come back in a big way.
Okay, so you're saying that there is a problem, but India grew at 9.2% in FY25. 9.2%. It's not 6, it's not 7, it's not 8, it's not 9, it's 9.2. So, what is this magic number that we are waiting for? It's chicken and egg. What exactly are we waiting for?
I think the other challenge, of course, is when it comes to the private consumption. The private consumption is the other issue, and all of us have seen that there is a change in the way people are now engaging in the private consumption, there is enough elbow room available, headroom available for individuals to raise credit also, because when it comes to leverage, we are much below what the other countries' average is of a similar league. So I think there's a elbow room there. But having said that, we have also seen when it comes to the corporate profits and also the salary increase in last couple of years, that also does not give enough elbow room for the debt service coverage to improve. So these are the other realities. But I would say that as far as the private consumption is concerned, we have seen that, if at all GDP grows on a nominal level at about 10%, the credit growth at about 12% is a reasonable thing, which we have seen in the past. But yes, of course, this recent number which has come is a bit disheartening. But I would say that at an aggregate level, when you look at it at the end of the year, when probably the busy season will also be there, and the kind of liquidity which is available now and the kind of measures which have been taken by Reserve Bank of India in the recent past, that will actually leave enough liquidity on the table, and which will probably propel the growth also, and also the spending and the retail spending as well.
Do you agree, Manish? Because credit grew at 20% in FY24 or 20% plus more. Retail credit was growing at 25-30%. That's why the RBI came down on them. So what is this number, or what is this environment that everyone's waiting for, and when is it going to happen?
So, Shobna, I don't want to be unpopular with you, but sometimes the journalist community with your K recovery, L recovery, M recovery, L recovery, we're creating, if you go down to brass tacks and not look at it top down but bottom up, you talked about private investments. I don't know what the numbers are. There's many economists will know it better than us. I'll look at 2 or 3 industries. If you look at paint industry today, frankly, there's too much private capital going on. If I look at that as a reflection of what bids were made. If I look at cement, the person you talked about, his son is getting into cement, Jindal. If I look at EV, our biggest winner today, Srini's colleague, Velayan, after making a huge success in financial services, huge service success in Crompton Greaves, is now doing EVs. So I'm just saying, if you look at it bottom up, wherever you see an opportunity, I think as an entrepreneur or as an investor, there is a plethora of capital going in there. I don't think there's any shortage of equity capital. Banking, Mr. Khara will know better and the others will know better, but I think today, even where debt in the absence, I think banks play a critical role, SBI especially, but now with the advent of private credit, Rashesh probably has a bigger balance sheet than most of the banks or NBFCs around here. And just now, almost anything that can be financed is probably financed. But again, if I'm sitting the roles of a regulator, I don't want microfinance companies and MSME finance companies. The issue is consumer consumption. Is that, what are you paying for it with? Is it family equity, or are they taking consumer loans to do it, right? That's where the leverage cycle starts getting a little out of control. Microfinance, the issue was the same borrower was borrowing from 4 banks.
Yeah, okay. Rashesh Bhai, what is your take? When are we going to see a boom? I'll just put one number. You said that you're seeing everybody, but the GFCF we reported is below 30%, and I think it's a 25-year low, if my memory serves me right. So we are nowhere, we're not going anywhere in terms of...
I think waiting for private capex is like that players that are now waiting for Godot. We've been last many years waiting that private capex will start. Fortunately, government spending and private consumption, also funded through credit, through consumption loans and all, has kept the economy going for quite a few in the recent past. But I think we do need to get private capex there. It will be dependent on even the global markets and exports. But Shobna, one of the other things that has changed is we have equity markets where there is a fair amount of optimism. Startups and unlisted market, and there is a huge amount of animal spirits already unleashed in their equity markets. Our credit markets, maybe because of the NPA buildup that happened over the last 10 years, banks, NBFCs, all of them, have all become hyper conservative. So you have this highly optimistic equity markets and highly conservative credit market. CapEx needs animal spirits in both. And the greenfield investments in India they carry their own risk, in terms of execution and all that. So unless we clear some of that and make some structural changes, there will be hurdles to private CapEx. Obviously, if the capacity utilization goes above 80%, people will find answers to that.
Nilesh Bhai, you have the last word.
So Shobna, this is like 5 blind men trying to identify elephant. I'll play my role of a blind man. Number one, when you compare past, please remember gross fixed capital formation in those days were gold plated. A 30,000 crore block is sold at 3,000 crore. So actually it was 3,000 crore investment shown as 30,000 crore. Number two, a lot of IT investment in those days was capitalized. Today it's straightway going by way of operating lease, by way of P&L account. Third and the final thing, in Twitter, there was one example of a flour mill in Pune. They had put 15 photo frames of approvals. A flour mill running in a small place like Pune had 15 photo frames of approvals. And the question was, have I got all the approvals or is there one missing? The entrepreneur of India is modern day Kalyug ka Abhimanyu. वो चक्रव्यूह में पैदा होता है और पांडव और कौरव दोनों से लड़ता है. And then we are asking कि ये चक्रव्यूह भेद क्यों नहीं सकता? We have to empower Abhimanyu so that he only has to fight Kauravs and not Pandavs. जिस दिन ये हो जाएगा अपना गाड़ी चलेगा.
I think that's great. That's a great point. It's true the regulation is stifling and it does choke entrepreneurship.
So since regulator is sitting in front of me, sir, it's not about regulation. It is about Inspector Raj. It is the Inspector Raj where, I'll give you a small example, sir. If I don't maintain my canteen cook's health record for 3 years, I could be put behind bar for 3 years. Now, what is canteen cook's health record? Is it ECG? If I have ECG, he can demand 2D echo. Is it 2D echo? He can demand stress test. Is it stress test? He can demand CT scan. And God forbid, if I got CT scan, he can still demand ECG, which I may not have taken. With this kind of law, you are burdening the entrepreneur. So we need Inspector Raj to end. Regulations are needed.
Yeah, I think that's been a fascinating discussion. Thank you all so much, Nilesh Bhai, Rashesh Bhai, Mr. Khara, and Mr. Manu.
Good job. Naresh Bhai should be a philosopher, not a fun manager.
Thank you so much to all of our experts for such an insightful talk. Request you all to please take your seats. It's now my pleasure to request our chief guest, Shri Tuhin Kanta Pandey, to kindly come onto the stage to deliver the keynote address.
Thank you, Shobna ji, Financial Express, for giving me an opportunity. Distinguished industry leaders, CFOs, senior journalists, and esteemed guests, good evening to all of you. We had a very fascinating session, very candid, and well, Nilesh ji, you don't have to be apologetic, to about regulation. Regulation indeed, and I'll speak about it, regulation also need to be toned down and to be made more realistic. And in general, if you see that deregulation is, or less regulation is one of the very important deliverables that we must have in case we want to spur growth and in any improving competition, trying to say that how much of licensing can be done. And in the budget itself, Commission was also announced that at least on the non-finance side, it will be looked at by the Commission. And on the finance side, the Finance Sector Development Council, Financial Sector Development Council itself is taking it as a very important issue. So regulation is also important. It's not really the ones who are talking of inspectors, but I think we have to also look at it, why we need to do what we are doing. So a little bit of questioning is important, and this is also very important issue for the gathering today, CFOs. So I'll come to my thoughts going forward. Now, a famous quote by Peter Drucker was, I quote, "You cannot manage what you cannot measure." This is important from the point of view of today's gathering, especially when we are celebrating today the awards to very esteemed and, I said, award winners today. Now, so there also is an issue of accountability. In fact, just to give you, how the word accountability has come, and we can reflect a little bit on that. Accountability comes from, holding to account. That means you are holding someone to account. And one of the, basically in the Middle Ages, you had feudalism in England, and then you had, these feudal lords were there, and they had to keep, they had large thing, and they used to keep certain people to really to account it, And there we have now arisen this theory of principal and agents. Who is the principal and who is the agent? And there is always an information asymmetry between them. And so therefore someone has to plug it. Like for example, in our case, we have a parliament and we have the executive. And then we had to have C and AG in order to see that, what the executive is really doing correctly or not. Similarly, in a corporation, you have shareholders and you have management. And the management has all the information. Shareholders have little information, not much information. So therefore, the whole thing is that you have to have accountants in order to people who are doing it, and then auditors who are independently reporting to shareholders, and we have our audit committee. So it's basically like, bringing the accountability, and I think CFOs play a very important role in this accountability. Now, let me begin by acknowledging the critical role CFOs plays in ensuring the financial integrity and accountability of listed companies. The capital markets depend heavily on timely, accurate, and reliable financial information. CFOs of companies play a central role in maintaining the financial discipline, transparency, and trust that form the foundation of the capital markets. If we compare globally, the core financial and strategic responsibilities of CFOs in India broadly align with international standards. The emerging trends in technology, analytics, ESG, cybersecurity, and data governance continue to influence these responsibilities. The position of a CFO is no longer confined to traditional financial reporting or cost management. Today's CFO is a guardian, as a custodian of governance, a technology adopter, and a key voice in shaping investor trust. The market looks to you for credibility. Investors depend on your disclosures. Regulatory bodies rely on your adherence. Your roles and responsibilities are also progressing with growth and expansion of the capital markets. Let me just reflect a little bit on SEBI's reforms in enabling growth and ensuring order. Indian capital market has witnessed unprecedented growth over the last few years in terms of capital formation, investor participation, growth in market capitalization, asset under management by mutual funds, portfolio managers, or investment by AIFs. The growth across segments has been phenomenal. Indian capital market has facilitated capital raising of over 54 lakh crore, which is 54 trillion rupees, over the last 5 years, which includes equity issuance, debt issuance, and resource mobilized through REITs and InvITs. FY25 marked a record year with 1.7 lakh crore raised through 320 IPOs, the highest number ever. The market cap of listed companies has increased at a CAGR of 15% over the last 10 years to reach about 450 lakh crore as at the end of May 2025. Keeping pace with the evolving and growing market, SEBI has been introducing reforms to improve the ease of doing business, as well as strengthening the overall regulatory oversight to ensure the orderly functioning of the markets and protect the interest of investors. Let me highlight some of the key measures that we have taken in listed company space. Rights issue process has been streamlined to facilitate completion in 23 working days from the date of issuer's board meeting approving the rights issue. For debt-listed companies, the requirement to publish detailed newspaper advertisements of financial results have been made optional. Companies can now publish a small box advertisement with a QR code and web link to access the full financial results online. Flexibility in voluntary delisting has been provided by the introduction of fixed price process as an alternate to the reverse book building process. Quantitative threshold of determining materiality of events has been specified for timely and clearer disclosures. Timeliness for disclosure of outcome of meeting of the Board of Directors concluded after trading hours has been relaxed to 3 hours from earlier 30 minutes. Companies have been allowed to select assessment or assurance of BRCR core disclosures. This would reduce compliance burden, cost and efforts for listed entities and their value chain partners. Now, disclosures are required only for those value chain partners which contribute 2% or more of the entity's total purchases and sales by value. Earlier, disclosures were required for all value chain partners, covering up to 75% of entities' purchases and sales. Further, the ESG disclosures for value chain are now voluntary, replacing the earlier comply or explain requirement, and are applicable from FY 25-26. We have introduced single filing system for listed entities. The tech-enabled single filing system now eliminates the requirement of filing the same document across multiple exchanges. Let me come to the debt market. On the debt side, market momentum is picking up as reflected by corporate bond issuances reaching rupees 10 lakh crore in FY25. This is significantly higher than the average annual debt issuance of 6.2 lakh crore over the previous 10 years. The corporate bond outstanding has increased to 52 lakh crore as at the end of FY25. If we compare this figure with the banking sector, it equates to around 57% of outstanding bank credit to industry and services. This ratio was around 43% a decade back. This rising proportion signifies a rapid growth of Indian corporate bond market. To further strengthen and deepen the corporate bond market, SEBI has introduced several key measures. Let me state. Streamlining the debt issuance processes. To broaden the overall debt market, the electronic book mechanism has been made mandatory for the debt issuances of rupees 20 crore or above. This was 50 crores or more earlier, so we brought it down to 20 crore. So therefore, there is an electronic book mechanism. It's pretty unique. The scope of EBP platform has been expanded to include the issuance by REITs and InvITs as well. The timeline for listing of public issue of debt securities has been reduced from T+6 to T+3 working days. This will facilitate faster access to funds by the corporate. To make the debt market more inclusive, the minimum face value for privately placed debt securities and non-convertible redeemable preference shares has been reduced from rupees 1 lakh to 10,000. New liquidity window for non-convertible securities has been introduced by allowing issuers to offer put options. This would provide investors the option to exit their investments before maturity if needed. Let's look at it, the asset management activity now. The growth in asset management industry over the last few years has been phenomenal. The assets under management of mutual funds have seen a CAGR of 20% over the last 10 years. As at the end of May 25, the mutual fund AUM has now grown to about 72 lakh crore as compared to around 11 lakh crore in FY15. So over the period of 10 years, we are going from 11 lakh crore to 70 lakh crore. To provide a fillip to the asset management industry and simplify the requirements for passively management schemes, we've introduced the Mutual Fund Light framework. A new asset class, specialized investment fund, has been introduced to provide more flexibility to the investors and bridge the gap between mutual funds and PMS. On the foreign investments, on FPI, as regards foreign investments, the long-term trend of foreign portfolio investment in India remains strong. The assets under custody of FPI has increased from 24 lakh crore at the end of FY15 to 78 lakh crore as at end of May 25. To facilitate the foreign investment through FPIs into the country, some of the key measures which we have taken, like onboarding process of foreign portfolio investors has been streamlined to reduce time taken to grant registration, to open demat and trading account. A dedicated FPI outreach cell within SEBI has been set up to directly engage with foreign investing community. To provide flexibility to FPIs in dealing with their securities post expiry of their registration, a suitable framework has been put in place. To facilitate investments by FPIs in GSECs, SBI has recently approved a proposal, in fact, day before yesterday, to relax certain regulatory requirements for all existing and prospective FPIs that exclusively invest in GSECs. These relaxations include harmonization of KYC review, non-furnishing of investor group details, permission to intimate material changes, etc. On the AIFs, a couple of days ago, SEBI has decided to permit Category 1 and 2 AIFs to offer co-investment scheme in addition to the existing PMS route. This will facilitate AIFs and investors to co-invest and will support capital formation in unlisted companies through AIFs. In addition, it has been decided to include accredited investors as QIBs for the purpose of investment into angel funds. This will facilitate angel funds to reach to a wider pool of eligible investors while staying in conformity with the company's law. To provide flexibility to angel funds, the floor and cap for investment in an investee company has been relaxed from 25 lakh to 10 crore window to 10 lakh to 25 crore window. Greater flexibility has been provided to AIFs in managing their unliquidated investment through introduction of a dissolution period. Category 1 and 2 AIFs have been allowed to create encumbrances on the equity of its investee company in infrastructure sector to facilitate the raising of debt or loans by such investee companies. Investments of Category 2 AIFs and debt securities rated A or below will now be treated as akin to investments in unlisted securities for the purpose of compliance by Category 2 AIFs. This will facilitate AIFs to comply with minimum investment norms in unlisted securities and give a fillip to issuance of and trading in lesser rated debt securities. REITs and InvITs. To enhance ease of doing business for REITs and InvITs, SEBI has decided to permit HoldCo to REIT and InvIT to adjust its negative net cash flows against the cash received from SPV to arrive at cash flows for distribution. In addition, a proposal has been approved to align the timelines for submission of various reports with the timelines of submission of financial results. Now, these measures indicate that SEBI's objective is to reduce friction for businesses and promote development of the securities market. At the same time, SEBI is also committed to strengthen the regulatory architecture and protect the interests of investors in the securities market. And we have to do that balance. The balance is needed, and the right balance, the optimum regulation, as I call it, is basically what we are, will strive to achieve. To strengthen governance of MIIs, we have mandated that in addition to the internal evaluation, the performance evaluation of MIIs and the statutory committees is to be done through an external independent agency once in 3 years. To ensure that only credible companies access capital markets for SME IPOs, we have introduced new set of eligibility criteria in terms of profitability, cap on offer for sale, restriction on the use of IPO proceeds towards loan repayment by promoters, and introduce phased release of lock-in on promoters' contribution. Besides, main board related party transaction norms have been extended to SME listed entities with materiality threshold of 10% of the turnover or 50 crore, whichever is lower. To mitigate the risk of misuse of securities of the client by the stockbroker, it's been mandated that securities for payout shall be credited directly to the respective client's demat account by the clearing corporation. You know that this is very, very unique to India, and it has been very well appreciated in the rest of the world, because a lot of jurisdictions, mostly, the securities remain with the brokers. And here the securities are secured, the funds are secured, because they are also lien to clearing corporation. So we have been able to work out a market system which is far safer and for the investors. And I think we should be all proud of this. We have also prescribed a range of measures to strengthen the equity index derivative framework. These measures are expected to taper the heightened market activity on expiry day and de-risk the system from sudden unexpected shocks. At the heart of market confidence lies strong corporate governance. Our push towards better governance practices, be it enhanced board independence, disclosure of material events, or scrutiny of promoter-related transactions, is aimed at improving accountability across the board. Instances of false, inadequate, inaccurate, misleading, and delayed disclosures of material information by listed entities leads to information asymmetry in the market. To strengthen the independence of independent directors and enhance their effectiveness in the protection of interests of minority shareholders, we have mandated that at least 2/3 of the members of the audit committee must be independent directors. To address the issue of perpetuity of special rights and do away with the practice of permanent board seats, we have brought in periodic shareholders' approval once in 5 years for any special right granted to a shareholder of a listed entity, and also periodic shareholders' approval for any director serving on the board of listed entity. We understand that the landscape is not without challenges. Growing business and regulatory complexities, compliances, cybersecurity risks, and resource constraints are real and pressing. We're actively working to strike a balance between regulatory rigor and ease of doing business. We are open to deliberate on the genuine concerns of the industry. At SEBI, the policy-making process involves extensive discussion with the stakeholders. Feedback received through public consultations are deliberated within SEBI and in advisory committee meetings. Around 100 consultation papers issued in FY 24-25 were, engaged with the stakeholders to work as a team. As CFOs, you're all playing a very critical role in maintaining the financial discipline, transparency, and trust in the capital market by ensuring compliance with specified regulations, maintaining an effective control framework, and facilitating audits. We count on you to uphold the highest standards of corporate integrity, foster investor confidence and trust. Let's work together across industry and institutions to build a resilient and inclusive Indian securities market. Thank you.
Thank you very much, sir. We request you to please remain on stage with us as we now invite Mr. Shamal Majumdar back on the stage for a fireside chat with the chief guest.
Mr. Pandit, thank you really for agreeing to this short conversation after, I know you've gone through very hectic days. The SEBI board meeting has just happened and you've pushed through 19 changes, which is after such a busy schedule. My first question to you would be that you are close to completing 4 months as SEBI chairman. Now, when you took over, SEBI, there was in the headlines for all the wrong reasons. Internal dissonance, there was a conflict of interest issue, all kinds of things. You have brought a lot of calm. And how did you achieve it? Number one. Number two, how do you do a self-assessment of your 4 months in SEBI?
I think we have, in SEBI, we have a great team. And outside SEBI also, we have a great team too. In fact, I'm very much impressed by the level of, information, feedback, and access that we can get it for what is happening on the ground through our different committees. There are associations. So I think an engagement process is, one is able to gauge what's happening on the ground, what the pain points are. And basically, I think we need to really set our objectives right. We are really at this time at the cusp where we have in India for next 20 years, we will have, I would say, a great thing for India in terms of various enablers that we have. Our democracy, demographic dividend, the talent pool which is available, and policy stability. So we can, with a lot of teamwork, we can improve these frictions, as I said, that how we can deregulate, how we can, meet with the risks without really burdening with extra information, extra compliances, burdensome, and making people, unleashing the entrepreneurial energy too. We need capital markets to develop. We have now 130 million in unique investors, and they've gone on a really an accelerated pace. If you really 5 years ago, their number, and post-COVID, there has been a blistering pace at which the unique investors have come. We've got fantastic technology. We have enablers, our fintech industry, other industries, they are bringing in lots and lots of things. So we have to target 400 million investors in next 5 years.
Right.
So if we are able to bring in that, on the other hand, we have to bring in good quality papers, issuers, which means also capital formation, so that, the securities market is eventually, we are, the whole place is intermediation between the savers and the investors and the people who are, where the capital will be deployed. So once we start together and look at it from the point and maintain this, I think we will beginning to more constructively engage with what we need to do.
Right. You have come up with an interesting term over the past few months, co-creation of regulations. You've also talked about spring cleaning. The question is, if I were to ask, this finding the right balance between too little regulation and too much of regulation is easier said than done. As a regulator, and you have done it, you have already hit the ground running. Do you think that this is almost impossible a task? I mean, what is optimum regulation?
Well, optimum is always in the eyes of the person who decides what is optimum is. I think it is, but optimum also may change with the context. But optimum regulation gives a focus. That means we are really saying that we got to be measuring. I started my thing that we need to measure where we are. So optimum would mean that there will be something less than optimum. So that suboptimal, we are able to say, how do we find what is suboptimal? Is when we start engaging in discussions and say, like, can we do these things better with a different approach? Sometimes we can reach that objective in a better way. And on the point of spring cleaning, as you said, that I think it happens in every household. You keep accumulating things and all that. At the end of the day, you find that there are things which you have not used for years, but still they are occupying a certain space. And sometimes, your own pressing needs are really put to side in order to accommodate the space for something which is completely useless. So once in a while, then you think that ki Diwali mein hai, to wo karna hai, and sometimes you do that. So we have to undertake some of these because contextually many things have changed, but the regulations have remained. So idea is that in securities market, I think we should see that whatever rules, regulations are, they need to be strictly complied with. Because of a large number of people, they are dependent on, this is in the system. Money is at stake. We say that lakhs and lakhs of crores of money is at stake. Lakhs and crores of monies are also being raised. So a good market, a trusted market will help both the investors as well as the people who want to raise money. But if we have too much of a rule, then it becomes also counterproductive because you don't know where to focus on. So that is what will require a certain level of dialogue in terms of people who are regulated entities and our own staff and others who have got fair amount of knowledge of why something came and whether that is necessary. The question is, we have to give it a focus, we have to give it time, we have to give it a priority, and then the things will start rolling.
On this SEBI board meeting, which day before yesterday, where you took so many decisions about ESOPs and several other FPI investment in guilds, delisting of public sector companies, one point that has been discussed is that SEBI has allowed investment bankers to carry on with its activities, unregulated activities, which is outside the purview of SEBI. SEBI's own consultation paper had suggested a year ago that this should not be done. The operations should be segregated. Now, a lot of quarters are saying that this increases the scope for a conflict of interest or other kinds of problems. How do you respond to it?
The conflict of interest issue is not being taken away. Like when you are saying that even if you are doing a regulated entity, there is a conflict of interest that needs to be managed. And if you have any merchant banker, if you ask them, they have to manage even if they are only doing regulated activities. Because there could be a buy-side advice they must be giving, they could be giving a sell-side advice. Now, you cannot bring in information from one side to benefit on the other. You have to secure the information for your clients. And the conflict of interest has been defined by SEBI, where we do not use the client's information to his detriment to do other businesses. So this is not going to be taken out. In fact, the circular which will be issued will state very clearly the segregation and this conflict of interest clauses and the Chinese wall if you need to put it. So now what was happening is that something is already happening. Unregulated activities are happening. But there is no clarity on when the client is not getting a clarity whether this activity which is being done or this advice being done or some services being delivered, whether it is regulated or not. Because overall you are saying this is SEBI regulated entity. So what we are going to say is that, okay, you have, if you are doing a SEBI regulated activities, these are the SEBI regulated activities permissible. Then if you are also doing some activities under any other financial sector regulator, you can really say, you have to disclose that these are the activities I am doing under ADA, or this is the activity I am doing under bank, RBIs. And then there may be some other activity which is neither of no regulator is regulating. In that case, you say this is an activity I am doing which is not regulated. Now, when you are giving this very clear message to the client has a clarity that, look, because sometimes he is in the impression that the services which are being delivered to me are regulated by some regulator. He is drawing some confidence that some regulator is watching. So he is not possibly doing his own due diligence, whether if they are taking the services, should I or should I not? And the point is that earlier when we had circulated this paper, on this point we had actually a lot of negative comments. That means on this point we did not have majority of the people favoring that hiving off. We still went ahead in this because we were looking at from the risk mitigation point of view that, okay, unregulated entity, let it go into some other bucket, into a separate legal entity. And we were still providing that sharing of human resources and IT resources and other things would still be possible. Now, that would have been a little wishy-washy thing. Like you have two legal entity, you provide, that the people could be shared and others. It doesn't make really sense. And why hive it in the first place? One, our objective will be met by the segregation, number one, within the same legal entity. Number two, stating clearly disclosures. Number three, in any case, completely meeting the conflict of interest requirements. So conflict of interest, it is not that hiving off only would have removed the conflict of interest.
Has SEBI officially buried T+0? Meaning there was a proposal of after T+1 there will be T+0. So has it been shelved permanently?
T+0 was in any case was supposed to be optional. Even that time, it was not supposed to be mandatory. So in one sense that, some of the technological thing, how we can do it, whether we can do it, that has been tested. But to make it mandatory is not on the table. Because there are, we have to bring everyone on board and everyone has to, because this is a question of a time. When we are doing it T+0, then all kinds of investors have to have there, and we have a problem of time zones. We have a problem of people decision because it's a market which is global. It's not really a local market because there are many people around the globe, and we have, we have FPIs are $800 billion invested in Indian market, both in equity side, more in equity and debt, but equity and debt put together, $800 billion. So it is like around the globe, so our markets cater to the requirements, and we have to really see that everything is in sync so that we don't have disruptions. So right now we are not, pushing forward that. In our opinion, T+1 has been one of the greatest achievements that India did, rightly so, and in fact we were the first jurisdiction to do it, really, in that sense, and the US followed suit. Many jurisdictions are struggling with it. They are somewhere they are in T+2 also, somewhere they are T+3, and they are really asking us, how did you manage to do it? We managed to do it also because we have a very robust market infrastructure system. In many sense, we have got, we are not putting all our eggs in one basket. We had 2 exchanges interoperable. We have 2 clearing corporations interoperable. We have 2 depositories interoperable. We have settlement systems which are there, so well catered for. Then we have a system where we have the clearing corporation directly, from pass through. Brokers are passed through, and so the possibility of broker default is minimized. So this kind of market architecture has been, we are able to push through T+1. And in fact, there were some initial problems also where some of the FPIs could not move the money on T+1 day because they have to pay some taxes and do it. And so there was a little bit of a difficulty for them as some tax consultant has to do and calculate. So we solved that problem by asking that, okay, on the T day itself, the trades will be given, because the trades are in any case finalized. The settlement is to happen T+1. On the T day itself, the trades will be given to the tax consultant. In the morning, 9 o'clock, the tax liabilities will be created. They can pay the taxes and take the money. As soon as they settle, they can take the money directly on the T+1. Now that's a very big thing because money has a float. So you can't have even 1 day of money means a lot. So T+1 itself, we have been able to successfully negotiate and do it. And before we go further, we have to really take a pause and see the system stabilize and see also the merits and demerits before we push further.
Right. SEBI has set up a committee on, to look into all this conflict of interest, mainly disclosure issues. That committee is doing its work. I wanted to know whether do you think corporate India, are you also thinking in terms of more disclosures or strengthening the disclosure requirements for corporates, or you think it's absolutely fine?
I think this question was on SEBI's disclosure about itself, and I think we are lagging behind the corporate disclosures, so we want to catch up first.
On this FPI outflow, the global turmoil obviously had a bearing on, the FPI outflows, and it has been one of the highest in Asia. Do you think from the regulator's point of view, the FPI outreach sale is there, you've been talking to them, do you think there is some other steps required from SEBI's side? Tax treatment obviously is not under SEBI's purview as of now, but in your previous avatar in the finance ministry, do you think the FPIs deserve a better tax treatment, or do you think there are more norms that can be relaxed in terms of reversing this FPI outflow?
First of all, I would, this FPI outflow and inflow is not really related to any tax issue or otherwise, And secondly, if you look at the secular trend, over a period of 5 years, there's been $50 billion of FPIs who have come on a net basis. Now, if you had a September and October onwards, some of the outflows, they had some other reasons. Now you have a Fed policy, then you have a policy in China, and then you had a certain stimulus package in China. There were stocks which were available cheap. Some money went from India to China, something went there. And then you had uncertainties. A lot of uncertainty where that where the people, what's going to happen on tariff policies. So the Fed policy, the Fed, how is the Fed going to react? What's happening to the inflation in US? So these are the things which are important thing, and our own engagement which we have intensified with the FPIs, and I had discussions with FPI, several discussions, both in India and in US. They don't have, actually these problems are not there. I mean, overall, let us set aside that, tax thing, anyone will say that, tax should be lower, and that even domestically you will also ask. But that is something which is there with the government. But otherwise, a lot of facilitation can be done. And this is something which in case of March and April, again, you started, saw there were some inflows again. So this is something which goes on. What we have to say, we have to provide a predictable, facilitative, and good environment. And the rest, I think they should be able to, because exit and entry, these are very common in case of capital flows. Overall, our markets are stable, our domestic investors, domestic flows are good, capable of handling the volatility, our volatility, which was also which increased post-tariff like rest of the world, but it was not as high as in some other countries, jurisdictions. And certainly it is well within our manageable limit.
Just a couple of more questions. There have been a lot of concerns about market manipulation in SME segment. Now, of course, exchanges are the regulator there. Do you think that system needs to be strengthened? I mean, what would be your message to the exchanges concerned? And also on a case like, say, Gensol, what as a regulator, what is your message to, say, the independent directors, the audit committee, the remuneration committee, all the infrastructure is there. Yet this manipulation happening. As a regulator, how are you seeing this entire problem?
SMEs, if you look at the SMEs in general, I think we have, as I said, I also stated that we had to take certain measures in terms of SME IPOs. But on a more systemic basis, we have taken measures where not only the exchanges take up the surveillance, but SEBI also has intensified the surveillance on these matters. And we will continue to watch. Market manipulation, we will come very hard going forward. I mean, we have come hard earlier also, but I think going forward, market manipulation will be one which we will not tolerate. The second part is, of course, you have the...
mentioned about Gensol.
Yeah. Now, there will be, and nobody can guarantee that egregious behavior will not be there. Because greed is something which I think from महाभारत में और रामायण में भी लिखा हुआ था, और वही चीज़ अभी भी हमें रिपीट करनी पड़ रही है. लोभ, क्रोध, माया. Human beings, the way the design defect is there, because ये सारी चीज़ें भी साथ में हैं, उसके साथ सत्य, निष्ठा, ये भी सब हैं. तो वैल्यू सिस्टम, प्लिथरा ऑफ वैल्यूज अदर पीपल डू एक तरह होता है कि हमको किस तरह से ऑनेस्टली हम आगे बढ़े. और सो एनवायरनमेंट शुड बी दैट यू डू एन गुड जॉब, ऑनेस्ट जॉब, हार्ड वर्क, मेक मनी, welcomed. Dishonesty, untruthfulness, falsehood, we should shun, and if people are not shunning, somebody should sanction, somebody should punish. So there may be cases which may be happening even now, as we speak. But the people will be caught, and then they will have to suffer. So this is the message, which is that deterrence. That let's not get into a territory where we are trying to divert resources, we are trying to do, and since we are today, we will be awarding CFOs who have done excellent work, everyone, it's also a moment of reflection for each one of us. This, swindling money and taking away investors' money and misusing it, abusing it, is something which spoils the whole corporate governance. And where we will have to eventually, someone will actually come in and catch you. So this is also a message but we should not, and these are the things which cannot be stopped only by regulation. Many people have asked me on this question. कि देखिए अब जेनसोल का हो गया तो आप कह रहे हो कि रिलैक्स करेंगे, ease of doing business. I said these are two different things. अभी regulation wise क्या ऐसी चीज़ नहीं थी जो कि इसको रोक सकती थी? There was a board, independent directors, chartered accountants, certified auditors, and promoters who could have been, who were well read, who were well regarded. I think the press was celebrating the success of the startup founders. Rightly so. I mean, people, we have to really grant it. We celebrate the, creation of new industry and doing it. But we can't celebrate the diversion. We can't celebrate the misuse of investor resources for our personal gain. This is not something which Indian society or Indian capital market will aspire for. So, therefore, such behavior is not due to paucity of any regulation that this has happened. This has happened despite a very tough regulation that we have. So, if you if based on that question, if you just write one more thing, start asking one more report, asking 4 more signatures, it doesn't help. It will put a burden on entire rest of the industry, which is also honestly doing these things. We will be, so therefore, there the issue is catch them, catch the culprits. Surveillance is the action, enforcement is the action, adjudication is the action. That is what we have to intensify.
About the total number of cases pending with SAT, has, I saw a finance ministry figure, has surged over 50% in 2024. Do you think there's a need for SEBI to look at this issue? And a lot of SAT verdict has gone against SEBI in the past. Do you think SEBI needs to really beef up its investigation and other aspects?
Again, I think we have to talk statistics and data. 90% of the judgments, SAT judgments in 25 have gone in favor of SEBI. Now, if you were to say that every judgment should go in SEBI's favor, I think that is also not a reasonable expectation from a judicial system. Because if some of our orders were not found favor with SAT, so we should accept it. There may be a problem. And if we don't accept it, we go to Supreme Court. In Supreme Court also, our success was 80% plus last year. So therefore, some of these are very old cases. In many cases, when the email, the notices were not properly served. Now they just sent some email and it was not served. The SAT says that is not due proper service of notice. So therefore, it is set aside. Now, some of those old cases are coming up now. What we are trying to say is that with every SAT observation, we have an internal process we have initiated where it will be gone through, and what are the observations, what has gone wrong, what is our internal capacity building. And if you see some of the orders lately what have been done, including some of the interim orders, you will appreciate that SEBI officers have done creditable work in unearthing scams. So they have to be given credit for that, and that whole thing is listed in the orders itself, which media is quoting.
We are running out of time. The final question, Mr. Pandey, is do we expect NSE IPO before Diwali?
I think I have said before that there is no obstacle that will remain in case of NIC IPO. So, and I have also clarified day before yesterday on the issue of clearing corporation, because there was a consultation paper which said that, whether we should do XYZ and separation. But these were thoughts. A consultation paper does not mean that, it is a finality. And I clarified day before yesterday, we have no proposal to structurally separate the clearing corporation from the exchanges, because we have seen there are different models. There's a model where two exchanges are owning one clearing corporation. There are models where, like us, exchanges are owning the clearing corporations as a separate entity. So, and there is an old legacy model in US, which in any case is a legacy model where the brokers are owning the clearing corporation. So, we would say that we can very well live with that particular model. So, that particular thing is not really an obstacle in terms of an IPO process.
So almost all the formalities are done.
I mean, you will wait, and finally, I think they are settling out all those things which are there. There's some legal settlement and other things, and some amount will have to be paid, and that the cases would have to be withdrawn and so on.
Right. Thank you very much, Mr. Pandey, for being so candid and giving us your time.
Thank you very much, gentlemen, for such an insightful chat. Request you to remain on stage for just a moment longer as I request Mr. George Varghese, Group CEO, Indian Express, to please present a memento to the chief guest. Let me tell you that this portrait is made by Shyam Kumar Prasad, Chief Illustrator at Financial Express. Request you to please take your seats. Thank you. And now, ladies and gentlemen, we are moving to the much-awaited Financial Express CFO Awards 2025. Now, like every year, the awards nominations witnessed thorough scrutiny by Financial Express editorial team and our knowledge partner, Deloitte India, to ensure that only the finest and the most innovative companies were placed in front of our most eminent jury. So let's meet the revered and distinguished jury members for the Financial Express CFO of the Year Awards 2025. Jury chaired by Mr. K.K. Mistry, former Vice Chairman and CEO, HDFC Limited, Ms. Ashu Suyash, former Managing Director and CEO, CRISIL, Ms. Vishaka Mulye, Managing Director and CEO Designate, Aditya Birla Capital Limited, Mr. Rajiv Gupta, Managing Director, Upwood Capital, Mr. Pradeep Shah, Chairman, Ind Asia Fund Advisors Private Limited. FE CFO Awards are presented across small, medium and large enterprises in manufacturing, services and BFSI segments. We also have two very special awards, the FE CFO of the Year and, of course, the Lifetime Achievement Award. I would like to invite Mr. K.K. Mistry and Mr. George Varghese onto the stage to give away the awards this evening. I would also like to invite Dr. D.P. Goyal, Director, LM Thapar School of Management, to kindly join us on stage. Ladies and gentlemen, we now begin with the very first category, Financial Express CFO Awards for Small Enterprises. Now, this is for companies that have a gross turnover of rupees 500 to rupees 1,500 crores across manufacturing, services, and BFSI segments. In the small enterprise manufacturing segment, the winner for the Financial Express CFO Awards 2025 is Concord Biotech Limited. Congratulations. Let me request Ms. Aditi Bhattacharya, Concord Biotech Limited, to kindly come up onto the stage to receive the award. Many congratulations and thank you, Ms. Bhattacharya. In the small enterprise manufacturing segment, our next winner for the Financial Express CFO Awards 2025 is Happy Forgings Limited. Let me request Mr. Pankaj Kumar Goyal, Chief Financial Officer, Happy Forgings Limited, to kindly join us on stage and accept the award this evening. Congratulations and thank you, Mr. Goyal, and thank you to Dr. Goyal. I would now like to invite Ms. Varsha Bandari from Nyati Group to kindly join us on stage. So in the small enterprise services segment, our next winner for the Financial Express CFO Awards 2025 is Central Depository Services India Limited. Congratulations. Let me request Shri Chandrasekhar Pujari, Vice President, and Srimati Lata Nair, Vice President, Central Depository Services India Limited, to please come up onto the stage this evening and collect the award. Once again, many congratulations and thank you very much. Continuing with the small enterprise services segment, the next winner for the Financial Express CFO Awards 2025 is NewGen Software Technologies Limited. I would like to request Mr. Arun Kumar Gupta, the Chief Financial Officer, NewGen Software Technologies Limited, to kindly come up on stage and accept this award. Congratulations, Mr. Gupta, and thank you very much. And thank you, Ms. Bhandari. I would now like to invite Ms. Nandita Pai, Partner and CFO Program Leader, Deloitte India, to kindly join us on stage. In the small enterprise BFSI segment, our next winner for the Financial Express CFO Awards 2025 is Home First Finance Company India Limited. Congratulations. Let me request Mr. Kamlesh Sanghvi, Finance Controller and Head Taxation, and Mr. Sunil Anjana, Head Treasury, Home First Finance Company India Limited, to please join us on stage this evening and accept the award. Very well deserved, and thank you very much. In the small enterprise BFSI segment, our next winner for the Financial Express CFO Awards 2025 is Mass Financial Services Limited. Let me request Ankit Jain, the Chief Financial Officer, Mass Financial Services Limited, to please come up onto the stage and receive the award this evening. Congratulations, 'Congratulations. 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 'Congratulations The medium enterprises category felicitates companies that have a gross turnover of rupees 1,500 to rupees 3,000 crores across the manufacturing services and BFSI segment. Let me invite Mr. Rahul Shukla, the Chief Financial Officer, Hindustan Construction Company, to please join us on stage. In the medium enterprise manufacturing segment, the next award for the Financial Express CFO Awards 2025 goes to Metro Brands Limited. Let me request Mr. Kaushal Parekh, Group Chief Financial Officer, Metro Brands, to kindly come up on stage to receive this award. Many congratulations, Mr. Parekh. Thank you very much. The winner in the Medium Enterprise Manufacturing segment for the FE CFO Awards 2025 is Kaplan Point Laboratories Limited. Let me request Dr. Sridhar Ganesan, the Managing Director, Kaplan Point Laboratories Limited, to please join us on stage and please collect the award. Congratulations. Thank you very much, Dr. Ganesan. And thank you, Mr. Shukla. Let me now invite Mr. Saurav Bhaumik, the Assistant Vice President, Radico Khaitan, to please join us on stage. All right. The winner in the Medium Enterprise Services segment for FE CFO Awards 2025 is eClerx Services Limited. Congratulations. Let me request Mr. Srinivasan Nadadur, the Chief Financial Officer, eClerx Services Limited, to please come up on this stage and collect the award. Congratulations to Mr. Nadadur, and thank you very much. The next winner in the Medium Enterprise Services segment for the Financial Express CFO Awards 2025 is Affle 3i Limited. Congratulations, as I request Mr. Kapil Bhutani, Chief Financial and Operations Officer, Affle 3i Limited. Please do join us on stage and accept this award tonight. Thank you very much, Mr. Bhutani, and thank you very much, Mr. Bhaumik. Let me now invite Mr. Saurabh Runwal, Director, Runwal Realty, to please join us on stage. The next winner, ladies and gentlemen, in the Medium Enterprise BFSI segment for Financial Express CFO Awards 2025 is Aadhar Housing Finance Limited. I request Mr. Rajesh Viswanathan, the Chief Financial Officer, Aadhar Housing Finance Limited, to join us on this stage and accept this award. Congratulations, Mr. Viswanathan. Thank you very much. The next winner in the Medium Enterprise BFSI segment for Financial Express CFO Awards 2025 is Avas Financiers Limited. Let me request Mr. Ghanshyam Rawat, the co-founder and Chief Financial Officer, Avas Financiers Limited, to kindly come up on stage and receive this award. Congratulations. Thank you very much, Mr. Rawat, and thank you, Mr. Runwal. Ladies and gentlemen, the next set of awards pertains to the large enterprises category. Now, these are companies with a gross turnover of over rupees 3,000 crores. These awards will be given to companies across manufacturing, services, and BFSI segment. The first winner in the large enterprise manufacturing segment for the Financial Express CFO Awards 2025 is Eicher Motors Limited. Congratulations. Let me request Ms. Vidya Srinivasan, the Chief Financial Officer, Eicher Motors Limited, to please join us on stage to receive this award. Congratulations. Thank you very much, Ms. Srinivasan. Our next winner, ladies and gentlemen, in the large enterprise manufacturing segment for FE CFO Awards 2025 is Bharat Electronics Limited. Let me request Mr. Damodar Bhattad, the Director of Finance, Bharat Electronics Limited, to please come on stage to collect the award. Congratulations, Mr. Bhattad, and thank you very much. The next winner in the large enterprise services segment for Financial Express CFO Awards 2025 is the Great Eastern Shipping Company Limited. Let me request Mr. G. Shivakumar, Executive Director and CFO, the Great Eastern Shipping Company Limited, to please receive this award on stage this evening. Many congratulations. Thank you, Mr. Shivakumar. The next winner in the large enterprise service segment for the Financial Express CFO Awards 2025 is Indraprasth Gas Limited. Let me request Mr. Sanjay Kumar, the Chief Financial Officer, and Mr. Manjeet Singh Gulati, the Vice President Finance, Indraprasth Gas Limited, to kindly come on stage and receive the award. Many congratulations and thank you. The next winner in the large enterprise BFSI segment for Financial Express CFO Awards 2025 is ICICI Bank Limited. Let me request Mr. Onindo Banerjee, the Group Chief Financial Officer, ICICI Bank Limited, to please come onto the stage and collect the award this evening. Congratulations, and thank you very much. The next winner in large enterprise BFSI segment for Financial Express CFO Awards 2025 is Bajaj Finance Limited. Congratulations. Let me request Mr. Anand Bakri, Treasurer, and Mr. Jayant Kothari, the Deputy Executive Vice President, Treasury, Bajaj Finance Limited, to please join us on stage to receive this award. Congratulations once again, and thank you very much. Now, ladies and gentlemen, I would like to invite Mr. Shamal Majumdar to kindly join us back on the stage. Ladies and gentlemen, we have now come to a very special segment of the awards ceremony, which recognizes the distinctive role that leaders in the industry have played in their individual capacity in the development of their organizations and the industry. The first award in the individual capacity is for the Financial Express CFO of the Year Award. This recognizes a leader who, with his innovative ideas, business excellence, and strategic leadership, has propelled the company to heightened success. A visionary who, with his exemplary contribution to the field, has become an inspiration for many across industries. Ladies and gentlemen, the Financial Express CFO of the Year 2025 is none other than Mr. Atul Daga, Business Head and Chief Financial Officer, Ultratech Cement Limited. Ladies and gentlemen, Mr. Daga started his career in a small unit of the Aditya Birla Group, where he worked on financial models. Now, once he got the opportunity to analyze data for companies across the group, Mr. Daga scrutinized the financials closely and unearthed several inefficiencies across the manufacturing units. Now, this drew the attention of the late Aditya Vikram Birla, and very soon he became his executive assistant. Working hard, Mr. Daga rose from within the ranks to become the CFO of Ultratech for his ability to manage a large balance sheet amidst the complexities accompanying several mergers and acquisitions. The FE CFO Awards jury has selected him as CFO of the Year. Ladies and gentlemen, Mr. Atul Daga on stage to receive the award. The illustration is made by Shyam Kumar Prasad, the Chief Illustrator, Financial Express. Congratulations, Mr. Daga. Would request you to please share a few words.
Thank you so much for this recognition. Thank you so much, the members of the jury. But I think this award belongs to my team, who have demonstrated, and their efforts is a testimony of good corporate governance, most ethical financial reporting, and transparency that they have brought to the table. And we at Ultratech have reached a stage where our results speak for itself. As I mentioned, corporate governance has become the name of the game. And at Ultratech, we have always taken pride in putting governance and risk management at the forefront. As for myself, I think I cannot forget the time that I've spent with Mr. Aditya Vikram Birla. The way he let me do things, the opportunities that he gave me to rise to where I am today, and to my current chairman, Mr. Kumar Mangalam Birla, for believing in me. The memory of this place, I think 34 years ago, I got married over here. So it brings back a lot of memories. And my wife, Kritika, who's here, she's been my strength, taken most difficult times from me, and yet supported me in everything that I do. It belongs to my daughter, Advika. She is in San Francisco right now. She wanted to be here with me, but she couldn't be. And my mom, who's always kept me grounded. Thank you so much. Thank you so much.
Congratulations once again, and thank you very much, sir. Ladies and gentlemen, on that note, we have come to the last award for the evening, the Financial Express CFO Awards Lifetime Achievement Award 2025. Now, this particular award is being conferred to a veteran financial professional who, with his vision and exemplary contribution, has not only shaped the future of the Indian industry, but become an inspiration for many. The Lifetime Achievement Award 2025 is being conferred to Mr. Natarajan Srinivasan, the Executive Vice Chairman, Coromandel International Limited. Mr. Natarajan Srinivasan has spent more than 3 decades with the Murugappa Group. Now, over these years, he has been the group's go-to person for complex financial restructurings, timely exits from risky businesses, and tough negotiations with joint venture partners. Whether it was hammering out terms with global investors or bringing the group's shadow lender back from the brink, Mr. Srinivasan's deep financial insights have made him absolutely indispensable for his tremendous efforts across the group, and especially for the dramatic turnaround at Chola Finance into a spectacular business. The FE CFO Awards 2025 jury had no hesitation in declaring Mr. Srinivasan one of the top financial minds in India, Inc., and selecting him for the Lifetime Achievement Award. It's my pleasure to request Mr. Srinivasan to please come up onto the stage to accept the award this evening. Is made by Shyam Kumar Prasad, the Chief Illustrator, Financial Express. Thank you very much, sir, for inspiring all of us. May I request you to please share a few words this evening?
Ladies and gentlemen, good evening. I stand before you today deeply humbled and immensely grateful to receive this Lifetime Achievement Award from such a distinguished publication. I extend my heartfelt thanks to the jury and the organizers for this honor, which I accept with utmost humility. As I reflect on my journey, I am reminded of how the past 2 decades, have nothing been short of transformative for finance professionals in India. The landscape evolved very rapidly with sweeping reforms that have elevated our framework to global standards. Both the Ministry of Corporate Affairs and Securities Exchange Board of India introduced fundamental changes, be it through the redefinition and overhaul of corporate governance, the strengthening of minority protection, the implementation of epoch-making regulations like the SEBI Takeover Code, insider trading regulations, the LODR, the new Companies Act 2013, strengthening the role of the Audit Committee, the independent directors, accountability of the board, introduction of IndioS, the rollout of GST, and the landmark Insolvency and Bankruptcy Code. All these have shaped and redefined the way we operate, making the CFO an indispensable pillar in the corporate hierarchy. My own career in senior positions spanning over 25 years has been a testament to the ever-changing and challenging nature of finance function. I have been fortunate to transition from a pure finance role into a broader management and troubleshooting responsibilities, whether it was steering a large NBFC to profitability during the global financial meltdown in 2008 to 2010, contributing to the resolution of a complex cases of a Government of India appointed board in ILFS under the chairmanship and guidance of Mr. Uday Kotak, or leading the turnaround of CG Power from bankruptcy to market leadership. Each experience has enriched me both professionally and personally. What has kept me going is a relentless quest for knowledge and a passion for performance. I have always believed that change is only constant, and our ability to adapt, learn, and unlearn is what defines our success. As professionals, I have always believed that our role goes beyond numbers. We are custodians of trust, architects of strategy, and partners in growth. The challenges we face are opportunities to drive progress, foster transparency, and build resilient organizations that can withstand the test of times. As India races towards the third largest global economy, I'm excited for the future of the profession. The opportunities for financial professionals are immense, and I'm confident that the next generation will continue to raise the bar. I'm deeply grateful to my mentors and colleagues at the Murugappa Group who trusted me with challenging assignments and provided me with opportunities to learn, grow, and lead. Their guidance and camaraderie have shaped not only my professional skills, but also my values and outlook. To the teams I have had the privilege to lead, whether during the turnaround of NBFC, the resolution work at ILFS, or the revitalization of CG Power, their dedication, resilience, and teamwork made every achievement possible. I share this recognition with each one of them. I would like to thank the regulators, the industry peers, and the broader finance community whose collective efforts have driven the transformation of the finance function and created an environment where learning and innovation continue to thrive. Finally, I thank the jury and the organization for this honor, which I accept with utmost humility, knowing that every milestone has been a shared effort. Thank you once again for this honor. I look forward to contributing to functional excellence and our country's growth in the years to come. Thank you.
Thank you very much, sir. Request all of you to please remain on the stage because I would also like to request our winners and jury members to kindly come on stage for the group photograph. Let me also invite our event partners for the group photograph, Ms. Nandita Pai, Mr. Saurabh Runwal, Dr. D.P. Goyal, Ms. Varsha Bhandari, Mr. Rahul Shukla, and Mr. Saurav Bhaumik. much, all of you. And with that, ladies and gentlemen, this evening comes to a close. We would like to thank you all for joining us and making it an unparalleled success tonight. An initiative of this scale and proportion could not have been achieved without the unstinting support from numerous quarters. We would like to thank our partners, our associate partners, Government of Uttar Pradesh, Runwal Realty, LM Thapar School of Management, Nyati Group, Hindustan Construction Company, and Maharashtra Industrial Development Corporation, our celebration partner, Radico Kaitan, and knowledge partner, Deloitte India. Thank you so very much. And ladies and gentlemen, it was indeed a pleasure having all of you here, and we hope to see you around next year as well. Please do join us for cocktails and dinner. Thank you very much, and good night.